I hope everyone had a great trading week last week. This is another week. Today is Sunday, the 21st of September, 2025. It's just about 5:57 a.m., almost 6 o'clock New York time. And I'm just recording my analysis and sharing with the trading community. This is not financial advice. That's just my perspective of what the charts look like and what the market is presenting in my view. So take it with a little bit of a pinch of salt. I'm not perfect. I'm just trying to help out um, as much as I can with what I know and what I can figure out. All right. So without out of the way, let's get into the dollar index, the first asset I would like to look at. And on the weekly time frame, the dollar index is pretty much still in a very tight range. You look at all the closings from somewhere around August 18th week all the way till this past week. Our closing has been within a very tiny range. Okay. The liquidity sweeps has been pretty wide, considering how price moved all the way from like 97 to 68 all the way down to 95, 95, 911. All our targets for last week has been hit. All the analysis target that I had on my chart has been hit. Um, I do see there is further downside on the dollar, but it's not going to go down as fast as most of us want. I think this range is going to continue. This choppy range, liquidity sweeps upside. Now we're getting our liquidity sweep to the downside. Now, on Friday, it had a very great chance to continue going down. Now, whilst a lot of technicals were pointing to a quick bounce, there were other things that also suggested that we're going to get a bounce on the dollar like this. The first one was the fact that right after the rate cut, the dollar gashed down with a lot of speed. Then Jerome Powell came to give the speech after the rate cut, and that speech was both interpreted by the market as dovish, but on the FX chart, this was interpreted as hawkish. Why was it hawkish? Because pretty much Jerome Powell was saying that this rate cut they put on the table is risk management based on the data on labor market. So really, they are not in an easing cycle as most of us would probably consider that they're going to be cutting rates going forward. Yes, he also did not deny the fact that there might be two more rate cuts this year. And I think that is where the dovishness comes in. But then he also did say that persistent inflation is still above the 2%, the Fed target rate. And he noted that the recent data that showed up on CPI also shows that there is an uptick in inflation. So with that kind of background, right after the rate cut, the market then saw that, okay, this probably could be a once rate cut, and they might not be necessarily cutting rates in the next coming months before the end of the year. Okay, so that's just for the news. Now on the technicals, um, Dixie had formed a lower cycle on my chart right here. So, this is a low cycle, this is a low cycle. Here's a wide low cycle. And whenever you get these low cycles, particularly on a weekly time frame, sometimes you would get this kind of move where, it's so oversold that it turns around. Could we grind right here for several weeks to come, like what we did between February 2025 and somewhere around April 28? Yes, very likely we could do that. We could just bounce up here, come back down, go up mid-cycle, come back down. But at least we've bounced off the low, bounced off the low cycle, which is very important. Whenever these gets there, they turn around. So um, MACD, as we have noted, technically has also been histogram bars. I mean, has always been above also the zero line, showing that there is some strength even on the weekly chart for the dollar. So whilst we're very bearish on the dollar, indicators are suggesting that the time is not yet due for it to gash down the way we are looking for, and that's coming. We just have to be patient and wait for it. So based on the weekly setup, as I'm saying, this is a very choppy one. However, this candle that we printed is a very strong reversal candle. Does it mean that the dollar is going to the sky? I don't think so. I think this range, just as we had since April 18th range, you get all these shooting stars, shooting stars, shooting stars. I think a similar thing is going to play out here for the next probably couple of weeks, where the dollar may push up slightly, but then it might sell back into the wake of this candle, just as we went into the wake of all these candles week after week. I think that's what I see here. So I expect some pushback down, some bounce back up. But as you can see, the range is just the closing range has just been between 97,489 and somewhere around 97,156. All right. So the closing range is very tight, kind of expresses itself as a Bollinger Band squeeze thing, where the price closings is very tight range. All right, so that's what I'm looking at on the dollar index. Now let's step down to the daily chart and see what the daily looks like, and what opportunities we can also get from there. So on the daily chart, I did spot a very interesting harmonic pattern. This is a butterfly. All right, similar to what we had previously. That was a bearish butterfly, but this is a bullish butterfly. Now, with this bullish butterfly that was formed on Wednesday, the 17th of September, okay, we've bounced off to about the Fibonacci level is now at 0.382 exact. They miss it, exact 382. Now, possibility is that it may actually make a rise target to the 50 period average, potentially trying to make its way to the 50% Fibonacci level. So with that weekly candle that we looked at, there is a high potential that you may get a continuation of the move up towards this rise target here of 97,646. This is a huge resistance zone, all right? Huge resistance zone. So I'm not expecting the Dow index to make its way past this level. Although for my analysis this week, the invalidation level is at 98. Okay, if we get a candle open and close around 98,300, then you shouldn't be expecting the Dow to go back down again, because um, this is technically on the weekly setup as well as even on the daily setup. If you look at here, we came right to the liquidity zone that was here. All right, this occurred July, there about the week of July 1st. Came right there, and we've come right back here, poked it to the same level. I already put this on my chart. This monthly support target is not just a double bottom if you're looking at it from this perspective, but if you go on the monthly chart, and actually since it's almost the end of the month, let's look at it. It's also on the monthly trend line. Okay, so this monthly trend line that I have here goes all the way back to 2020. All right, that was a 2021 trend line. It goes all the way back to 2014. All right, so 2014, I connected these bottoms together, and that's how I come up to this one. Okay, so look at it from here. From 2014 comes to 2021, bounce off of it, and in 2025 we are here again. All right, so it's a precarious chart to look at, because could we get a bounce from here and the fall is over? It's very possible, very very possible. But in some light, I also don't expect it to be like that, because um, I don't have a monthly divergence as I was looking at it. Okay, so if you look at the monthly, we don't have a divergence yet. Um, no, we don't have a divergence yet on our RSI. We do have some divergence on MACD if the month should end like this, but RSI, there's a RSI low in June, and we've come. If the month closes like this, yes, this may create itself into a divergence on the monthly chart. So we might have to just wait and see. what happened by the end of the month in the next couple of weeks. I assume the month ends in about 10 days. So we'll see what the next 2 weeks trading session will look like. That would give us a confirmation. If RSI stays somewhere here and price stays above, these levels, then we could gradually be calling selling on the dollar as in the interim over. All right. In other words, it won't be going down some more from here. We'll probably do a little bit of consolidation here, and then maybe we might make our way back up. But let's let the chart print. All right. Now back to the daily chart, and then we start up to the 4 hours in a few minutes. So yes, based on the daily, we've done this fib retrace to the 0.32 of this butterfly pattern that I have on my chart. When we had the bearish butterfly, which was here, all right, so this was the bearish butterfly. When you moved here, came here, moved here, and went up, this formed itself into another butterfly. Okay, just as now you have moved 1, 2, 3, and if you connect the dots, it also will form a butterfly. So this did a 100% retrace, as I have put it on my chart, that this was the 100% retrace of the bearish butterfly. Now, could we do a 100% retrace of this bullish butterfly? Where would the target be? Target zone will be in this liquidity zone. All right. So there's a liquidity zone waiting here. A lot of people that have taken short on the dollar sitting here happily, they might be trying to go for this liquidity. So let's keep the bigger picture in mind whilst we narrow down to what is tradable. All right, now let's step down to the 4 hours and see what is tradable, what this week presents itself. All right, so on this 4 hour chart, I've seen, okay, dollar has been rising, 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 rising. Now it's got to this resistance range, just as we're looking at on the weekly chart. This is where it's been closing for the last almost 3 to 6 weeks. This is where all our closings have been. All right. But we traded above, we traded below. And so this is what I'm expecting, that this trend line that I put on here is going to hold price to push it back down. Okay. When we came here, you realize that we're making lower highs. This is a lower high, another lower high, another lower high, another lower high closing. And I'm expecting this to be another lower high for this continuation. So in the coming week, should we get a rise target? Just like we poked all the way up to this level on this candle here that occurred on September 11th, we could get something like that, where you get a candle that pokes all the way above the trend line, but then you also close below the trend line. All right, so that's where the rise target and the 0.5 fib, retrace of the bullish butterfly is coming from. So I expect potentially dollar could move up to this level. Just be on a cautious side for that kind of move, but I'm not expecting it to continue grinding past that level. So it's also very possible because on the momentum charts that I look at, this momentum is drying out. And let's look at momentum based on MACD. Okay, now you could already see MACD here is thinning out. Okay, we already have the histogram bars already dipped down. That's rising on weak momentum. Okay, so the momentum is dying out. In other words, it started to decelerate, and MACD lines on 4 hours have also crossed down, supporting the idea that the move up on the dollar is momentarily going to pause and pull back down into the wick as we looked at it from the weekly time frame. Likewise, if you look at our stochastic cycle, this stochastic cycle is also giving you a divergence. All right, so you have a divergence on stochastic cycle as well, where this high and now this high has a divergence. Okay, now RSI hasn't given us a divergence as yet, but also RSI is in the overbought zone. Okay, and technically the next 4 hour candlestick print would also confirm a divergence on RSI. Currently, it is not confirmed. Yes, we've gone higher high, but this is where your RSI level is compared to the previous RSI level. So with all this in mind, yes, I'm expecting a pullback on the dollar in the next coming week. Target wise, my target is somewhere around here. This zone that paused before they shoot up to this level. This whole move here didn't have a lot of strength, really. I think market makers were also taking advantage of the opportunity. I think in the next coming week, yes, my target level is somewhere around 96, 489. This range between 96, 620 and 98, 484 thereabout. This will be my target range in the next coming week. Um, on the hourly, which is probably one of the best trading time frames, you could already see that we've hit the trend line with a lot of selling. If you look at the selling pressure that has come in versus the buying volume that is here, yes, buyers stepped in, but then you look at this huge volume bars here compared to the selling, you realize that the buyers are losing it. Okay, the buyers are losing their grip. So in the next, of course, it's still above it trading moving averages. So we need to give it some time to work itself out. We need a candle that kind of opens and closes below on the 1 hour below the 21 period moving average. That will be your confirmation signal to sell the dollar. But that's my projection on the dollar index in the next coming week. Again, as I said, you could see divergence is also being formed on the dollar. It's just not confirmed yet. You need at least one candle that closes below the low of this, which is somewhere around the 21 period moving average. Again, this is what I'm saying. You need that confirmation on the 1 hour chart. So at least it's pretty helpful to know that your signal is below the 21 period moving average. You just want to wait on the 1 hour, get a candle open and close below the 21 period moving average, and you could expect to hit your target of 96, about 96, 475. That'll be my target range for the dollar. I think I've spent enough time on the dollar index. I would like to thank you for paying attention to my analysis. Have a great trading week. Cheers, everybody.